morning, everyone, and welcome to the European crossover webinar. And bear with me, I'll just go in and switch this to the euro dollar. And we're seeing the euro still doing up pretty well. We saw that real strong rebound, and inversely, if I should say so, one moment. Continued weakness here with the dollar. There we are on the daily. And that's been my concern, like I said, throughout the weakness that we've seen in equities over the last week and a half, and the dollar has not found an ability to rebound. And then we saw the weakness, the sell-off in equities yesterday, and obviously post-FOMC, and still we didn't see much of a rebound in the dollar. I mean, we didn't even take out the key level, which was 93.89. So it continues to go on and remain on the back foot. Obviously, the euro's gone and pushed up in here. You can see right here to this 1870, or just paring back just a bit here. Equities right now have been a little bit of a mixed after yesterday's sell-off. We kind of came back a little bit. We can go on and take a quick look there, and some of the other markets. Obviously, my focus is generally on the Nasdaq, and looking over here on the 2-hour chart, and we'll kind of expand that a little bit closer, or probably it might even be easier to take a look at it on a 30-minute. You probably see a little better move this way, and you can see we did see a pretty good dip even yesterday, and then we actually started working a little bit higher, even in Asia. We kind of paired back, but we do have options expiration today, so we could see some additional wild volatility. Now that's on the Nasdaq. We'll take a look at the S&Ps on the 30-minute. Something similar also, although we are at 33.46. Been as low as yesterday, as low as around 33.11. Okay, and nice rebound back, and once again, kind of middle of the road in it. The option expiration probably has a little bit to do with that. And you can see here with the similar move with the Dow futures also. Take a look at the crude oil market. We should actually be rolling this over at this point to the November crude. I think we'll do that right now. So November crude, we're at 41.41, but obviously similar picture to what the October crude was as far as technicals, or basically the lay of the land, if you want to call it, after that nice rebound. And it's been a nice rebound, to speak of. I mean, we were really down the dumps, and we've actually moved higher as equities started rebounding. Then we've even added to that. And then looking at gold, we did come off. We've kind of seen a little bit of a rebound here in gold, kind of once again middle of the road in it. Did see that market kind of fall down when equities under a lot of pressure yesterday, but we since rebounds. So it's kind of holding its own overall. Not too bad. And let's go on and take a look at the economic calendar. Well, we do have Italian industrial orders, and for whatever reason, that doesn't look like the data's come out. I do see that from time to time with Italian data. I'm not sure what's up with them, but uh, it's just 3.7%. Hang on, I'm hearing over the squawk. Yeah, Italian industrial sales. That's Italian industrial sales, but um, up 8.1%, with year over year minus 16.4%. It's not, for whatever reason, it's not updating here in Reuters. But that data was slow nonetheless, because it's 304. Well, I'm seeing the print on Reuters is 304, not Reuters, the squawk, and still nothing coming up over here. We did get current account, Eurozone current account. Now, at 8:30, we do get, speaking of current account, and the States is what we do get the current account also. Canadian retail sales at 8:30 Eastern, and then leading index. This isn't what it used to be, but University of Michigan, we are going to get a fresh run at that. They're looking for 75. That'll be at 10 a.m. Eastern. And that will be it there. Take a look at some news. So the Australian and New Zealand dollars are slightly firmer, posting weekly gains. The Australian dollar held its head above 73 US cents, while its New Zealand counterpart was on track for its sixth straight session of gains on Friday against a sagging greenback, which was weaker on downbeat economic data. The Australian dollar was last at 73.16, was on track to post a small weekly gain. New Zealand dollar rose 0.5% to 67.90, was up a solid 1.9% so far this week, and Kiwi's really done amazing. We'll go into the technicals on that. It hit a two-week high of 67.85 after Finance Minister Grant Robertson sounded positive about the economy's recovery prospects in a television interview. Both countries have been successful in controlling their second wave of coronavirus infections while keeping overall case numbers and death toll low relative to the global standards. In addition, greater investor risk appetite amid expectations of a faster global economic recovery led by China has boosted the antipodes, the analyst said. It's notable that despite the recent weakness in equities, China's demand proxies like copper and iron ore have gone moonshot, and so has Asian FX, with yuan making new cycle lows, and this led to the Aussie dollar's outperformance. The Aussie is often traded as a liquid proxy for the Chinese yuan, which is at the highest since early March against the greenback. Well, the greenback is just low. We already talked about that. I've been saying that, and I've gone on, mentioned in the chat, went on, you know that, I went on a rant last week a couple of times. I know most recently on Thursday, and I've been saying that when the dollar does break, it's going to go fast. 200 ticks like it, at the blink of an eye, in my thought. And even as bad as the index is falling now, I would have expected at least of us to have gotten to about 94. Now, and I've been saying that we should have already been at least above 95, not going to do it 96. So we're just about ready to fall apart. Once again, like I said, I don't know if it's going to be today. Not saying it's going to be today, tomorrow, next week, but the dollar will be making new lows, at least in my opinion. You're seeing it from just the charts. I'm looking at the euro right now. It's 18.45. The euro should be pulling back, and once again, like I said, with these equities being so low, and if the dollar can't even even muster to get above 93.89, and this hasn't even made it even to 93.67. I think it's been in the 50s. Then this thing is, like I said, get the submarine honking going. It's just going lower, lower, lower. Waiting on the U.S. dollar, the latest data showed jobless claims remained elevated at 860,000, while both housing starts and Philly Fed business index fell. The dollar was on track for a 0.3% weekly gain against a basket of major currencies. Elsewhere, the Aussie is down 1.4% so far this week against the Kiwi, trading its lowest level since August of 72, or since August at 1.0772. Jason Wong, senior market strategist at Bank of New Zealand, I should say. Strong technical resistance for the pair at 1.1350 to 114, led by the possibility of negative Kiwi interest rates. And the dollar set for a weekly loss as economic confidence sags. The dollar held tight ranges on Friday, but was set for a weekly loss against major counterparts after downbeat data cast a shadow on the economic outlook, with positive comments from New Zealand's finance minister helped prop up the Kiwi. The dollar gave up gains after the Federal Reserve upgraded its 2020 economic forecast to trade in negative territory on Thursday. It was last quoted at 92 against a basket of currencies. And we talked about the jobless claims remain elevated. Fed said on Wednesday expected the U.S. economy to shrink by far less than previously forecast in 2020, perhaps to keep rates ultra low for a prolonged period. The dollar was little change against the yen at 481 after hitting a 7-week high of 452 on Thursday. Against the euro, the yen hovered around one and a half month high of 23.29, and dollar yen dropped overnight almost too much, although it's been falling since Monday, said Masafumi Yamamoto, currency strategist at Mizuho. He said losses in U.S. stock futures are all contributing to a weaker dollar. Markets held the tight ranges in Asia against the New Zealand dollar. Adding to broader risk aversion, U.S. stocks fell on Thursday as technology-related shares slid for a second day, and economic data weighed on the wider market. For the dollar to regain its upward trend, it's necessary that the market make sure that U.S. stocks take a pause from a correction in stock prices, said Yamamoto. Starting about 29.59, having lost around a cent on Thursday after the Bank of England said it was looking more closely how it might implement negative interest rates amid rising coronavirus infection rates. But the pound later erased losses after the Financial Times reported that the ECB, the European Commission president, I should say, Ursula von der Leyen, said she was convinced a trade deal with Britain was still possible. The euro, meanwhile, was little changed at 18.49 per on the dollar. Well, it actually is doing better than that. It's 18.44. Let's see, anything else? Nope. So with that, we'll move into the analysis. And just adjusting a couple of the charts. One moment. There we go. So the euro found a nice rebound after pressing lower on U.S. equity sell-off on Thursday. Resistance for Friday will be 1940 with support at 1787. Let's go move on to the cable. So cable saw a smart rebound off the 28.78 level. Resistance on Friday will be 30.25 with support at 29.11. And once again, you can see a nice little hammer bottom in here. And 30.25 remains the same. On to the Aussie dollar. Same similar rebound that we saw here in the others. So the Aussie rallied back after testing the 72.42 area. Resistance on Friday will be 73.31. Oh, looks like we just about made it right there. Anyway. And we supported 72.42. And 73.31. That remains the same there. And looks like we've already tagged it. The high was 73.33. And right now we're at 73.13. Let's move on to the Kiwi. And boy, this thing is strong as all get out. Look at that. Holy smokes. So the Kiwi came back with a vengeance on Thursday. Resistance on Friday will be 68.30 with support at 67.50. That thing is doing very well. And on to the dollar CAD. So the dollar CAD finished at session lows in disappointing fashion on Thursday. Support on Friday will be 30.96 with resistance at 32.17. And on to the peso. So the dollar peso gave up the ghost on Thursday. Support on Friday is going to be the major level of 20.76. Resistance will be 21 even. And this thing just looks terrible. I mean, just looks absolutely abysmal. Onto the dollar yen. So the dollar yen tested support level of 452 before coming back with a minor bounce. Immediate support is going to be 438 with resistance at 508. This dollar looks like a dog. Hang on. Speaking of the dog, here we go. The dollar index finished Thursday with a thud, closing at its lows. Um, Resistance will be 93.34 with support at 92.41. And 92.41 is just where I would expect them to try and defend it. Wouldn't surprise me if we blast on down here towards 92 cents. Obviously, you know, with options expiration, that's probably why they haven't pushed it any lower. But once again, I've been saying this thing should be traded in this area right here. And really, since we're even lower now with equities, we should be actually up here pressing against 96.50, 96. That's where we should be. At the very least, we should be at 90, 95 and a quarter at the absolute least. The fact that we couldn't even take out 93.89 is so pitiful that, like I said, that's why we're here. That's what I'm saying. It wasn't looking at technicals or any kind of projections. I'm just seeing how this thing was reacting when it should be reacting the best under the circumstances, which is the weakness we'd seen in equity. So if it couldn't pull up then, you knew that the upside was rather limited. And even then, I thought it might be able to get at least a little bit higher. And it's just a damn dog. Onto the cross rates. Okay, on the upside, we're looking at 70.83. We did punch up a little bit higher. We got up to 71.17. So definitely above here. The resistance, you see this underleg right here, the opening, that would be it, which would be, well, there you go, 71.16. So that's what we'd be looking at. But they're paring back a little bit. But once again, it's still up to go higher, but that's the area where you'd see some sellers. And once again, I just look at the body, so it wasn't like I just happened to see what that level was. Just went with the right there where it opens and use that as a level. Looking at support, I'd want it to be lower than that. Support would come in. You see the top right here, this close, go with that, and that would be 70.30, 70.30. Moving on to the euro yen. We had 24.21, and right now the high is 24.34. We'll keep the 24.21. On the downside, we did take them lower yesterday. We'll try to hold their own. We can go into 2 hours, see if we can find something a little closer. Right here. See that close? So it'll be 23.61. Going on to the euro odd. I think this has pretty much stayed steady most of the week. There's just been up and downs. 61.24 on the downside, upside 62.48. So far today's been 62.12. Yesterday was 62.32. Now, once again, we'll just keep it the same. There's not been any real significant change there. Let's go on and move on to the Euro Kiwi. Oh, under. There we go. We have pressed even lower, and you can see where they find support there on that body right there, which is going to be 74.55. As this Kiwi continues to get stronger, maybe have to push that a little bit lower right there, this body. 74.26. We're giving the Kiwi a little bit more respect. And on the upside, we'll take a look at the 2 hour. Right there. 75.20. And onto the RCN. We are open. Looks like we're open to punch a little bit lower. Support's going to come right there with this open. Right there. You see there? Which would be 76.25. And the upside, right there. You see these two lows right there? Comes in at 76.85. Moving on to the guppy. I don't think we really changed. And we blasted past 35.26. Support's going to be, you see these bodies closes right there. Actually, it looks like that's where it went too. Sure enough, that's where it did. See these touches here? That is 34.65. We'll stick with that. And on the upside, you can see right there. If it can recover, it'd be limited to 36.42. And lastly, sterling nod. Trying to work up a little bit higher here. You see this open right there? Close in, open, comes in at 78.23, which is, they just got a little bit above that yesterday, but that'll be 78.23. And support, go with this high, these two highs there. which would be 76.64. There we go. And that's going to do it here for the wrap up here. We've already gone over the indices. And once again, I'm not expecting any kind of moves whatsoever until we get into the cash equity open. So we're all set. And thanks for joining us here on the European crossover webinar. And we'll see you in the chat. Oh, Mark asked to share some levels on the Dow. Okay, let's take a look at that real quick. Initially, right here, right there, coming across there, you can see that is key. So it's going to be 27,875. But don't forget, it's options expiration. So it's going to be, there you go. That's 28,776. So that's your first initial target. And so between 28,776 and 27,950. This area, this little zone is share here. They may try and go up here and punch some stops there and fizzle out around here about the 27.9. But you can see right here is that will be test 28,676. And on the downside, it actually come in right there. Right here. That's your first, which would be 27,621. That'll be your first break where if they test on the downside, this is where they'll target. And then you'll probably find some if we take a dip, you'll probably find some people starting to cover, but we'll probably try and press the stops right there, 27,621, and see if there's fall through. And there's probably going to be in between these two levels right there. Right there. So try and punch in the stops and they'll probably kind of fizzle out on the first run, so in the middle of there. So that is 27,621 into the 27,569. Okay. All right, that goes and does it. And thanks for joining us here. And you see, options expiration. Well, basically it's options, but on the it's going to be on the indices. And I don't think it's going to make such a big deal because of how far we've fallen. I think there'll be a little jerking around, but I don't think it's as big as most people expect it's going to go and be. So there's options that are, I'll give you an example here. I don't really look at the Dow very much. So let's just take a look at the S&Ps. Let's just go there on a 30-minute. Oh, it's probably not. Let's go use the 2-hour. So I think it was a bigger deal. Had we been here, okay, hold on. Had we been here, I think it would have been a bigger deal because do we try and push the market back up to these levels here, or do we blast down here, right there? Okay. The fact that we've already fallen this far, you see what I'm saying? I think those that were going to be of any real significance at this point, I don't think anybody thinks that all of a sudden it's going to drop down here by mid-U.S. session. Anything's possible, but I'm just saying that it will drop. And this is going to be VWAP from the June 12th lows. So keep that in mind around that 32.50. That could be basically a magnet. But once again, I think you would have seen way more volatility if the market was right here. Because do we try and push the market up to here and satisfy any options that are there, or do we push it? So really what you're looking for, those options expiration, at least from a trading perspective, at least from what I'm concerned with right now, I don't have any options already listed on here, but or in my possession, if however you want to go and call it. So to me, I'm looking, what impact will it have in today's trading? And to me, I'm like, well, if we were here, right here, we'd be saying, wow, I mean, for those guys that still have options that are from here and here and here, it'll be behoove them to try and push this market so that those options finish in the black, so that they finish positive. Or maybe they're going to try and let this market roll back down. We've already fallen down a chunk. I'm not saying we can't fall down more, but whatever's basically in the books, so to speak, it's in the books. I'm saying is anybody who's stuck with an option up in here, let me put it to you this way. Let's say that there's an option right here. Their option is, well, let's just make it easier right here. Let's say it's 3,500 and it's, moment. And there's 34.75 and an option at 34.50, okay? What's the likelihood that we're going to go all the way back up here to put these guys at with the 3,500 calls back in black, or the ones with the 34.75 calls in black, or the ones with the, let me put you this way, so let me go back, the ones with the 34.50 calls in black? Yeah, right, good luck there, because if the market were to come back, let's say that we saw a rally back up towards this high, anybody that's down in the dumps with their equities, they're gonna sell that junk. You see what I'm saying? We get up in here and we test this here, they're selling they're cashing out their equities. You know what I mean? They're like, I'll take this. This will get me out flat, or it'll get me out with a couple of nickels in my pocket. So that the thought now that anybody, see, had we been here, then we'd be, well, we have corrected down. Maybe the momentum is still higher. Maybe they can push it so that anybody that has 3,500 calls, 3,525 calls, 3,550 calls, they'll be able to get closer to being in the black. I mean, the key thing is if you're in the black, because it's options expiration. But I'm saying is here, something like this, we've already fallen so far down that those that had it close to, you know, I mean, maybe if you've got a put or whatever, but I don't think it's going to make that much difference from a volatility standpoint. I think we're going to kind of hang around here. We might even push a little bit higher, and then maybe for later on in the session, because we are finishing on a week, then we'll probably try and push here. The key thing will be this 32.50. So let's take a look at this on a weekly chart. Bear with me. You see how we look here? So it's going to be easy for them to try and push beyond last week's low, okay? Which would come in, I guess those are important numbers to figure out. Look at it. Last week's low was 33.23. So they're probably trying, that's not even that far away. It's just a spit away. The key thing is, can they take it down here to 32.50? 32.50 is the VWAP off of the June 12th low at the time. So they may try and make a move towards that. That would be a good target. The one from the March lows comes all the way down to just, what was it, 30,020, okay? But yeah, they may try and go up to the 32.50 later on in the day, because as we finish the week, the lower lows you get on these weekly closes is going to induce more selling from medium to longer term investors. So that can open the door. But right now, once we get past options expiration, I think we're going to just clown around here. Maybe we push up a little bit higher. But once again, I've already explained to you, anybody that has calls at, once again, at 3,400, 3,425, 3,450, 3,475, 35, they're not getting back in the black. It ain't happening, folks. So that's what I'm saying is it doesn't carry as much weight from at least the type of trading that we'll be focusing on, because then we'd be looking at, whoa, you know what? Let's go back to the 2-hour chart here. So once again, we'd be saying, if we were here, we'd be saying, wow, well, if you look at it, people are still long up in here. They'll allow this market to push up higher. You remember, we would see those days where they'd keep pushing these markets higher only because they were higher and they could push higher. Now you've broken the back of these markets. You see what I'm saying? This was a key number right here, this 34.16 here on the SPOOs, you see here. So when they went back to that, that's where they ended up failing, okay? And then they rotated lower. So unless you were able to get back above 34.16, if we had gotten back above that and held yesterday, it could open the door then for us to push up probably closer towards the, probably like the 34.75-ish area, okay? Right now, we're not even close there, so forget it. That's what I'm saying. For the type of trading that most of us can do, I don't think it's going to be any real impact, because I don't think we're going to really move that much anywhere. We might move up to about right around this area, 33.75 maybe, by the time, early mid US session, but that's probably all she wrote. And then we'll see if we rotate lower and maybe try and go to those lows. You can actually see that, and I'm kind of ticked because I didn't even keep track of that. But that's off of the, I think I ended up, let me go back here. Yeah, that was a 2-hour on there. And if I add this back, you see, that goes from the July 12th low. So yeah, they haven't come back to that yet. That's June 12th lows. Okay, see there? A VWAP. So the VWAP comes to at 32.50. So that would be a good downside target for them to go with towards the end of the session. So if you see this thing rotate lower later in the day, you probably want to just go with that, and they'll probably try and press down to that area. But anyway, that's all she wrote. But I hope that gives you some explanation. I mean, that's the way I look at it for the trading that I'm going to do if it would impact it. At this point now, we've fallen. This point is that I don't think it's going to make that much of a difference at this point from the action that we'll see intraday. Anyway, thanks for joining us here on the European Crossover. We'll see you in the chat room.